Hey guys, it is February 22nd, 2026 here with your January recap. I do apologize that I have not gotten this out a little bit sooner. Life between planning the wedding and, being in the room every day and putting out recaps and my own trading and dogs life. These take a little bit longer than you would believe to kind of do a presentation. I'm not the most tech savvy person in the world. Putting these together definitely takes some time and some motivation to do. So I do apologize not getting this out a little bit sooner. But, as we know, January was the month of metals. It was an interesting month because not only did I have, my biggest loss in well over 12 months on silver. I also had, it was on SILJ, Silver Junior Miners. We'll cover that in a moment. I then also had my biggest win in over 12 months on silver, SLV. So it was a pretty interesting month. No trades remain open from January. I do still have some trades open, when I'm looking at Netflix from November on the short side and ExxonMobil in December on the long side. It did start off as a red month. It started down about 2%. Actually, just a smidge under, but roughly 2%. That wasn't the big deal. My problem was, and when we kind of get to the end of this and we look at the stats, my issue was, just like December, it was a very choppy environment. I'm watching stocks go in January, like the memories, like the optics, and I'm trying to force the issue. At the same time, I'm watching software names get blitzed, and I'm trying to short. And I'm trying to short these things that are overextended. So it's like you've got names that are just getting hammered, and you want to be in some of those short, and you're in one. You're in Netflix. And then you see the SanDisks of the world going higher, and you're thinking, well, maybe an Alab, maybe a Reddit, maybe the market wants to expand some breadth into more growth names. And that wasn't happening. And then you see things going vertical like silver, and you're just like, okay. And so there was so much going on from that perspective. Not kind of just like talking it through out loud makes me chuckle because the market's pulling you in 50 different directions. It's sending you so many different signals. You got metals going vertical. That's not going to last. There's a big trade opportunity there. You see the memory stocks going higher and they're just trending higher. And, you're like, okay, maybe growth names and AI related names are going to be good. Let me try some. You're realizing energies are moving. You want to be long those. You realize software's getting its ass kicked. You want to be short those. So it's just like so many different ideas are coming into your mind that ultimately it leads to a little bit of paralysis as well, a little bit of over trading. That was definitely what happened to me in January. But with that said, let's just kind of start to dive into a few of these trades. Alab was the first trade that I took in January 2nd. And on this day, I had Alab trigger as a long. I had SanDisk trigger as a long. I had Reddit triggers along. I had Amazon triggers along. I had First Solar trigger as a long. I end up taking Amazon. I take Alab, and I take Reddit, but I leave SanDisk alone. Regret, obviously, because even a 5% position, moves your portfolio 5, 6, 7% plus on just a simple trade. So a little bit frustrating, of course, because, that's also, you're seeing that name work. You're not in it. You're forcing the issue in some stuff like Alab. This one I bought on the 2nd, stopped out the exact same, or should I say, I stopped out on the next day when it took out prior day's low. And we can just kind of look at Alab here. So at the time, this is what it looks like. And I'm like, okay, right? You've made a big move up. You've shown a big move up before, a pullback, a move right back up above all key moving averages, and then chop, and then eventually go on for a big move. You get the big move, similar to here. You get the pullback. You now start building higher lows, and right up this right-hand side, I'm like, this is not too bad. This is a nice little tight consolidation. Okay, perfect. That triggers on the 2nd. Well, I get long, right? No big deal. I think this could work, multiple days up. Before I know it, I'm like, this could go to 230, whatever. Doesn't happen. Very next day, gets its ass kicked, and it is what it is. The very next day, I ended up buying some Amazon, and Amazon at the time was a little bit different. This one had its own unique little consolidation, but similar thought, right? You've got this little what appears to be low cheat setup, and we're building what could be some higher lows, right? You're building what looks like to be some higher lows, and here you are on the very far right hand side of this chart, and you're like, this isn't a bad consolidation. And I'm trying to buy that breakout. Well, instantly, same day, stuffed on Amazon. So again, that was kind of annoying. You're buying the breakout over that range, and then you're just getting stuffed. And all the while, you're watching, SanDisk. Now, you also don't know that SanDisk doesn't stop you out the next day, but it's the one you don't buy is the one that ends up working really, really well. Reddit, I thought it was doing a really nice job building higher lows off the 20 simple moving average. I was just buying it as a higher low setup. This one ended up, at least making me some money. But ultimately between, Reddit, between Alab and Amazon, the net was nothing. So although Reddit was okay, it wasn't really anything to write home about. And let's just go ahead and quickly take a peek at Reddit. And I really did like the higher. So you had finally made a nice big move, and then you just started to tighten up on the right-hand side, where I'm kind of looking at this and I'm like, you know what? This thing is building out pretty nicely through what could be like this nice 240 level. And you're consistently putting in these higher lows. So I'm like, all right, let me just go ahead and get long off of this as a higher low, right? If we can just get through prior day highs. So that was literally my thinking. I get long Reddit, and then, that works for a few days. On day 5, I don't trim any of these days because, of course, I've got hopefully some bigger plans for Reddit. And then on this day, as soon as you start to, day 5 starts to take out a prior day high and then reject, I take some off. You break a prior day low, I take some off, and then you really start to wash out, and I just kill the rest. The last thing I really want to do is, where this thing is wicking all the way down to is now right up near my average. And the last thing I want to do is just watch even on the remainder of my shares after a 5-day push, go flat on the position. That wasn't something that I would have really been too happy about. SILJ, so at the time when I was shorting this, and actually I was in Colorado, my thinking was this. You had kind of been in this situation where this one was showing some relative weakness, and we can we'll pull up the charts. So this was on the 7th and the 8th, both for SILJ, and we'll look at the charts on the 7th and the 8th. But one of the things that really got my attention was if you kind of looked at when this finally broke out over October's highs, it wasn't all the way until the 11th of December. Well, if you look at SLV, when it took out its October highs, this was in November on the 28th. So we're talking 2 weeks prior. By the time you already get to the 11th, 12th of December, you're already, you've already broken out. So SILJ, in the back of my mind, the silver junior miners were showing some relative weakness. I wanted to be short the silver junior miners, thinking, okay, right, we've already had an extreme leg up, a consolidation, and now, another strong leg up, and thinking, okay, you know what, this is probably, can give us some kind of a pullback and build out a new base. I don't just think this thing is going to continue going vertical. It is what it is. So SILJ, I start getting short, and this was right in this little consolidation. So, even before that. Yeah, so the 7th, right in here. Oh, yeah, okay. So we would get this little subtle gap down, and it's technically a red day. And as you can kind of see in these charts, I mean, you'll have to kind of zoom in on these a little bit. But I'm on the 7th, I'm getting short almost as an immediate breakdown. And then it just grinds back higher all day. So I'm having to take a stop out. And then the next day, I'm seeing this thing just, kind of put in these little upper wicks, start to break down, take out its, pre-market lows, 620 setup, get short. And then what does it do? It just continues to grind back up. Again, I cannot sit in that. So 2 red trades. The one thing that I'll say is, even throughout some of these trades, I never really got too stubborn, meaning I wasn't just sitting there adding into a loser. I did that not adding to a loser too much, but adding to my position, I'm only really comfortable doing once I'm sitting in the green. I really don't love, unless I've got a clear risk off level still, adding into a losing position, right? You're kind of just arguing with the market. And this was kind of like my first go at silver juniors. Again, silver had made a huge move. Gold's already been on a run for a year plus, right? You gotta sometimes, realize silver, in my opinion, was playing some catch up to gold. When you look at gold, right, this was a 10-year long cup and handle breakout going back into early 2024 of February. So this wasn't like this was some brand new trend, right? This is like first base, second base, third base, fourth base, fifth base, and now you're breaking out potentially, who even knows, another base. But I was thinking, okay, silver's just kind of playing some catch up. Whoops, didn't have that chart pulled up. Let me show it again. So the breakout was way down here, and then you get a consolidation and a breakout, first base, second base, third base, fourth, and then a fifth, and then a breakout. So it's like, by the time some of these things get going and they're on their fourth or fifth base breakout, usually you kind of are done. That's not to say that metals have to be done. They kind of look like they want to go higher. I'm not necessarily going to argue with it, but at the time, I did definitely think that SILJ was a little bit of a laggard. Excuse my laughing emoji. Let me just delete that there for a second. That was funny because I actually shorted on that day, and we'll talk about that one here in a second. But I thought that they were lagging, and that didn't quite end up panning out the way I had hoped. So continuing on, AppLovin, man, this one's so frustrating. So I played this on the 8th as a bear flag breakdown. It was maybe too short of a bear flag breakdown. One of the things that we've noticed over the last couple of weeks and even months, and something that I've kind of reiterated a bunch in the room, you guys should probably know this by now, is if you want to short against those declining moving averages. We have seen it time and time and time again. I shorted AppLovin on what I thought was going to be a little quick bear flag breakdown. That did not happen. I got stopped out, reclaimed the 50, hit the 20, and then eventually rolled over. Let's just kind of look at that chart really quickly because very frustrating. So right idea, wrong timing. So what had happened here was I thought that this was a little bear flag consolidation after this move down. And in the back of my mind, this could have very well been a late stage base. And, you've been on an absolute tear for AppLovin, right? You've kind of rejected off these highs. You break down, you consolidate, you start to break down. And I'm like, okay, let me get short 611. I get short the very next day, I'm getting stopped out. So pretty dang frustrating that I'm getting stopped out in that situation when all it does is go and hit the falling 20 and then literally just implode from there. So kind of frustrating that I had to take a loss in AppLovin, and not the worst loss ever, but they start to add up, right? Little loss, little loss, little loss, and it's not little by any means. It's still real money, and it hurts. Obviously, I don't get bothered by it too much. It's just got to think about things in terms of percentage. But to think you were this close to nailing an absolutely awesome trade when all it really did was rally for 3 days right into the declining 20. And then maybe I could have gotten myself short on the 14th off that declining 20 and taken another little stab at it. Again, it is what it is. Would have been a fantastic trade. I mean, this thing went all the way as low as 360, and I had a 611 short. Wasn't like some humongous a trade that I had on, but it could, that 5% could have done pretty dang well all on its own. So it is what it is. SEI, it was in the energy space, and I thought, okay, huge base, right? Are we going to start to break out of this base after this up move, big consolidation, up move, another consolidation? And I kind of viewed this as a little bit of a short bull flag. But what ended up happening, I ended up just buying it, and we'll kind of look at the chart. I thought this was, big move up, consolidation, big move up, consolidation in the right energy space. A little bit of a tight bull flag, just a couple of down days in a row, no real distribution volume back above the 50. Let's go ahead and get long over prior day high. I did exactly that, and then, the very next day stopped me out on a break of lows. So not too much I can do about that, no big deal. But again, just like in AppLovin, something on the short side stops you out, something on the long side stops you out, and you're recognizing energies are going up. You're recognizing some software is getting hit. You're recognizing metals are getting extended. And it goes back to what I said in the beginning, just very, very choppy. So continuing on, Alibaba, this one actually wasn't all that bad. This to me just was a falling wedge, and we'll kind of just look at this. I thought this was a big, big falling wedge, and that's literally that's just exactly how I looked at this. And I bought the gap up. So fairly simple. Just buy the gap up 159s. I tried to add over prior day high, not a good enough close to be able to hold. And then I got stopped out a little bit on this, a few on this week close. I added a few more as a higher low setup this very next day, the 21st. I got some trims off at 178, got some trims off the next day, and then ultimately got punched out of the last of my piece on February 3rd. So fairly simple, just a simple falling wedge, as this thing has shown you the ability to break out and make really nice moves. In the past, I thought, hey, you know what? Why not another really nice move to 220 or something like that? So that was kind of my thinking. But in real time, you kind of just got to manage your risk for how choppy this thing is. So I digress, and we move forward. Anyway, A-Lab. Oh boy, this A-Lab, what a pain in my ass. So I bought again as a reclaim of the 50 simple moving average on the 12th. I tried adding a piece, or I cut it, and then I re-add some on the 620 setup, and then just a completely miserable name to trade. And let's just kind of look at the chart so you guys can understand the misery. You're trying to buy this thing in here, then you realize it breaks down, but what does it do? Instead of just like breaking down, it holds a higher low, right? Structure on the daily is holding a higher low. You get nice and tight little inside day. So here I am. I'm buying this thing right in here, no big deal. But ultimately, it just not really doing anything. I don't trim some off into here. I get trimmed some off in here, and then I re-add the 620 setup as I realize, hey, you know what? We might actually be building another higher low, and this is actually maybe a good spot to add and not to trim. And then I finally did get some trims off on the 20th, and then ultimately, again, tried adding another piece off the 20, only to kind of cut it just the next day. So just far too choppy and not enough strength in that name to make me want to stay around. And then ultimately, look at where we are today. This thing has gone absolutely nowhere. Moving forward, SILJ, once again, just in this consolidation, right? Again, I shorted on the 13th, so up here in this consolidation. And my problem with this SILJ trade, and this was the biggest loss that I've taken in over a year, I saw this gap up first red day. I played it as a first red day setup, and then, we effectively hung out right near these highs every single day. And what did I do? I just kind of, and we'll pull up the chart, I just shorted on this as a first red day. I did take some off on the 14th, as this thing was kind of holding up. I put some back on the 15th, covered some on the 16th, but did not cover all, got stubborn. I still thought, you know what? And this was my thinking, they're going to kind of blow silver up overnight. They're not going to give anybody a chance to short it. I want to make sure I'm already short versus just missing the short altogether. And then I get caught in the gap up, and that ends up kicking my ass. So it is what it is. I don't want to, make too much of a big deal about it, right? I still kind of kept the loss at just over, roughly call it 1% of the portfolio. So although it sucked, right, it wasn't world ending. It is what it is. So you just got to take your lumps every now and again. But the thesis still really didn't change, and that was silver was getting quite extended. But again, obviously it sucked. I ended up taking a bigger loss than I would have liked. The lesson that I could kind of learn from that is don't hold red or flat into the weekend. You don't know if something's going to gap up on great news, bad news, world-ending news. Nobody knows, and you're basically just rolling the dice into the weekend. Definitely a lesson for me to learn. From the 14th until the 23rd, I just had what somebody would say is a cluster of bad trades. So, and it wasn't really that they were, quote-unquote bad trades. I just couldn't really get myself positioned into stuff, whether it was, something like NVIDIA on the short side, thinking, software is going to come down, and we'll just kind of pull up this chart. I started shorting against the 50 simple moving average, the 50 and the 20, got short, stayed short, added a piece because I saw this wick, and then ultimately got stopped out on the gap up. So it's not the world's fastest mover, but again, just a bad trade. Trying SLV on the short side as well, whether it be on the 23rd. Trying this SLV, trying SILJ. Cypher was a halfway decent, nothing burger of an idea, where I'm trying this thing as a long on the 23rd into some of this pullback and then a 620 setup, knowing I don't really want to buy strength. I want to buy weakness in this market. So wait for something to pull into a key area, wait for your 620 setup, buy that 620 setup, and just not enough cushion, right? Where I take some off on day one, day two, I'm just go ahead and I'm closing that trade. Similar, again, let's pull up the chart. So pullbacks into a key area, right? Starting to reclaim that key area. You get the push on day one, right? Trim some off. And then day two, you're just getting stopped out. And even though it makes this move right back up, just not able to get myself situated in some of this stuff. So ultimately, it was just a cluster of, bad trades. And it was just, part of it was mentioning what I had mentioned before, right? The market was just throwing us curveballs left and right. You got consumer staples going higher. You got financials doing nothing. You've got memory stocks and some growth names, optics and memories trying to go higher. You're getting pullbacks in software names. You're getting vertical moves in whether it be industrials or metals. So it was just such a kind of a cluster of a market. It was just kind of a pain in the ass to really get anything going, even though I'm watching names just either blow up, and I'd like to be short those, and I'm watching names just continuing to track higher, and I want to be long those, and then I'm watching an industry group go vertical, and I want to short that. It's just you almost kind of got to laugh at it, because that's how difficult January was. And the problem is, and we'll talk about it here momentarily, was I had far too many trades. Silver, finally, I'm able to get short. So SILJ, I was not able to keep. I was hedging my silver short on two overnights, kind of using the futures market. So let's just quickly pull up the chart. And obviously, SLV ended up being a pretty massive trade for me. And then SILJ, cool, little wallet, not really a wallet patter, but definitely a good trade. Could have been another massive winner had I kind of stuck with that one, but I had to close it. And the only real trade that I can hedge on the overnight using silver futures was the SLV. And I had plenty of SLV open to really realize, I don't need both of these. I'm not going to try and manage risk on both when I only just need to have one. But I started to get short once again on the 26th. And, on the 27th, you're in the money. 28th, you're kind of, starting to hang out near flattish, down a little bit of money. But I put on a silver futures hedge, and on the overnight, this thing actually ends up paying me. From this night to this night, I'm getting paid. And that was nice. That kind of just allowed me to sit in silver. And then this evening as well, I ended up putting on a silver hedge as well, just based on the washout and then the reclaim. I was like, well, what the hell? Let me go to bed with another hedge. And then on the overnight, we started to roll over. And then I ended up just cutting that hedge, right, basically in after hours, only to then see silver start to unwind and then ultimately gap lower. And, I did not know that it was going to be this insane of a move. I didn't even do that great of a job of covering it. I had covers at like 90 at the open. I had covers at 85, 80, 79 when this thing went all the way down to like 69 or 70 bucks. So had I done a better job of just being a little bit more patient with that size, the trade could have been, that much better. These were all the trades that were taken. If you guys want to kind of zoom in on this yourself, there are some trades I definitely did not talk about in here. Some completely irrelevant, like HUT, right? 2,300 bucks. I'm not really going to talk about that. Just basically some flat trades out there, right? This Cypher, literally a $400 trade, right? We're not going to talk about all these. Otherwise, we'd be here all day. 48 trades for the month. Way too many, especially in a choppy environment. That kind of sucks. And then the stats for the month, Obviously, 7-figure month, absolutely fantastic. I mean, I'm not going to complain about that. SLV, biggest winner. SILJ, biggest loser. A 25% win rate, which is pretty disgusting. And, yes, one of the things that I said was it was still one of the better months, but, if that comes at the expense of a headache for 80% of the month, I don't want it. Literally, I just don't want it. I'd rather have made half or a third or whatever of what I made in January if it came with no headache. Sign me up. February has been a little bit of a headache, and I'm excited to make that video as well. But one of the things that I've done well is, I've kind of reduced in my frequency of trades, although last week was, probably my worst week in terms of frequency. So just reduce the frequency of trades, and it is a green month so far for February, so that's ultimately pretty nice. But January, just way, way, way too choppy. Got started off in a pretty rough way, and it just took almost a Hail Mary something getting tanked in order to kind of make up for the month. I knew there was an outlier opportunity there, but I didn't necessarily I didn't take advantage of it as best as I could have, which is fine. It still was a great trade. But I don't want to have to, rely on a single trade to make the entire month and kind of, undig the hole that I put myself into. So hopefully this video helps, guys. Sorry again that I didn't get it out as quickly as possible. Life, kind of comes at you quickly, and the hours just pass on by very fast. So hopefully I'll be a little bit better about getting these done. It is my wedding this upcoming week, so I won't be around as much for just the last week of February, and I look forward to making February's video as soon as I get back. So anyway, hopefully this helps, guys, and I'll talk to you guys soon. Cheers.